Hello everyone, thanks for joining me for the Daily Snapshot. Today we'll be looking at Amazon Q2 earnings 2020 and how to trade it. But before we do that, please take note and pay attention to the following important information. Please know that CFDs are high-risk products and you should be completely aware of the risks that they pose. Also, please realize that this is general commentary only and does not constitute investment advice. And lastly, our sources of information. Thank you very much. Now, let's get into it. Amazon's due to release its earnings after market close today. This graphic, we have a derived weighted basic earnings per share. You can see that the year endings from December 2016 through to December 2019 has steady earnings per share on a basic earnings per share basis. 2020, by our measure, is slightly down. What we've done is we've added Q1 with the forecast for Q2, annualized it, and applied a weighting. So on a weighting basis, giving 2020 more sensitivity, it does look as if the earnings per share may be slightly down off of 2019. Please know that the stock is expensive. It has a PE ratio of 144.90, and that means there's very little room for error. But the market generally expects Amazon to have performed well during the pandemic. In fact, there's a growing number of customers that took to ordering essentials online in the US and some abroad, and that's certainly going to add to top line. Now, we know that Amazon is exceptionally strong on the retail front with hard to beat prices. It's worth also mentioning that Amazon Fresh Pickup provided a boost to the top line, and that's where customers would order groceries online and collect them from a nearby store. The cloud business is considered a profit engine, so we certainly want to see news coming out of that. And Amazon's artificial intelligence Echo device has helped market smart home products and services. Amazon Prime is going to be important, so take note of that in the earnings release. The delivery, same-day delivery and next-day delivery certainly strikes the right chord with customers, and the pandemic boosted Amazon Prime's operations hugely, and we expect online orders to have surged. More than that, the number of Prime memberships is likely to have soared as well. Let's go through to the technical chart, and what we want to take a look at is price relative to the 20-day simple moving average, and you can see that the 20-day simple moving average is actually acting as support. So it's acted as support over here, over here, over here, over here. Well, something remarkable has happened. We've actually got price now trading below the 20-day simple moving average. And what you want to focus on is the interaction between price and the simple moving average. If price remains below and that simple moving average rolls over and starts heading down, well, that's a sign that downwards momentum is increasing. And we'll check that also with the RSI. If the RSI crosses below 50, well, then it's moving into the bearish side of the oscillator. Let's just end off by considering a few takeaways here. So the idea, of course, is that Amazon is expensive. There's very little room for error when the results are released. The market does expect the company to have had a good Q2, but technically we can see that there is some weakness that seems to be manifesting, and we want to be watching the slope of the simple moving average. I hope you found this useful. If you do like the snapshot and you'd like to see more of it, please consider subscribing. Hit that subscribe button underneath. Thank you very much, and looking forward to speaking with you soon.